Hi, this is Rowland from Money Markets TV. I hope you had a great 4th of July. But while you were focused on barbecues, fireworks, and all things American, you may have missed some news south of the border. Enrique Peña Nieto won a three-way race to become the next president of Mexico. If you're asking why this is a big deal, consider that Mexico is the 13th largest nation in the world by land mass and 11th by population. Its economy is among the 15 largest in the world, and thanks to the North American Free Trade Agreement, it's one of the world's largest exporters. If any other country had similar numbers, U.S. investors would be clamoring to get aboard. But we hear relatively little about the investment opportunities in Mexico. This is doubly ironic since our two economies are so closely linked. Of course, Mexico has its share of problems. Corruption is everywhere, as evidenced by the recent bribery scandal involving Walmart. And then there's the violence. Drug cartels have turned large parts of Mexico into war zones. Innocent bystanders are killed every day. Workers and businesses, understandably, try to avoid those areas. But a new government in Mexico could help turn the tide. In addition, the country could get help from new U.S. policies on trade, immigration, drug enforcement, traffic safety, and other issues. Even if things don't improve dramatically, Mexico still has world-class scale, productive workers, and untapped potential, an attractive combination for investors looking for value and growth. If you want broad exposure to the country through exchange-traded funds, your options are fairly limited. The iShares MSCI Mexico is the oldest and largest, with about $1 billion in net assets. Like a lot of emerging market ETFs, its portfolio is heavy on telecom and consumer staple stocks. As you can see, right now, EWW is bumping up against some long-term highs dating back years. It's been turned back from these levels several times in the past, and the resistance looks solid. So now may not be the best time to buy, but the trend is definitely worth watching. You can also play Mexico's stock market with leverage through ProShares Ultra MSCI Mexico, ticker symbol UMX. Like other leverage funds, UMX amplifies the returns of an already volatile index, so I'd view it as a trading vehicle, not a long-term position. This same warning applies to ProShares Ultra Short MSCI Mexico, which is designed to go up 2% for every 1% decline in the underlying index. In other words, it's a bet that Mexico's stock market will run into problems. If you want to take a less aggressive and longer-term position in the country, Mexico is a key component in several diversified Latin America ETFs, including the iShares MSCI Emerging Markets Latin America, iShares MSCI Latin America 40 Index Fund, First Trust Latin America AlphaDex, Spider S&P Emerging Latin America, and Market Vectors Latin America Small Cap. Personally, I'm not jumping into any of these ETFs just yet, but I'm keeping my eye on them, and I'd advise you to do the same. I'm Rowland from Money Markets TV. Thanks for watching.